Morning and welcome to day 2 of the IRFA 2025 conference. I'm delighted to start off the day with an ex-colleague of mine from our days at Alex Forbes, John Anderson. John is now at Sanlam, and I'm going to ask him to start off by just explaining to us what his role is there now. And John, welcome. Thanks for joining us.
Yeah, thanks so much. Really appreciate it. Yes, I've just recently joined Sanlam as head of the Sanlam Corporate Investments area. And essentially what we do is we construct best-of-breed portfolios and solutions for institutional and corporate clients. So essentially what we do is we take the best capabilities within the investment management business and structure it into solutions for corporates.
So the investment management business per se doesn't report into you, but you rather utilize the expertise to craft portfolio solutions for Sanlam customers.
That's correct, yes.
And is that across both the retail and the institutional side of things?
So we focus on the institutional side. And then we also look at annuitization. So annuities for pensioners, for pension funds, as well as for default annuities. We look at that as well.
Okay, so you're here at the IRFA conference. Is there anything in particular that you have noticed around the theming and the discussions that are taking place?
Yeah, I must say it's a great conference. There's a lot of good speakers, good content, and it's good just connecting with everybody in the industry to see everyone committed, to improve member outcomes. What sticks out for me is the focus on impact and sustainability. And I think that's been gaining quite a lot of traction, and I think it's quite positive for me. And a lot of the speakers are talking about how do you do that, what do you need to do. So it's no longer talk. I think a few years ago it was, funds didn't know how to do this, what to do, investment managers as well. Now we're actually getting to the, how do you do it practically, and looking at the hard questions. So that to me has been a standout, but still a lot of work to do on that. But I think that's a positive.
To me, it's interesting because impact, while it's a positive, can also be a little bit tricky in the sense that it's a buzzword. It's easy to get behind, but how do you practically ultimately implement it? And right now it's been driven by the providers within the industry rather than from the demand at a trustee level. So how do you bridge that gap at the end of the day to ultimately assist trustees to make it practical so that they can get behind the theme of impact? And is it a holistic theme, that a philosophy that trustees should follow, or is it a slice of assets that perhaps they would allocate?
No, I would certainly say it should be a philosophy. So many years ago we had the advent of the PRI, so looking at responsible investing, and funds adopted a lot of those principles. But over the years, I think the idea was not to just invest responsibly, but invest for impact. What are you looking for as a retirement fund member? You're looking for the highest level of return at a given level of risk with real world impact. Very important. I think a lot of the discussions have been around private markets as an example, because that's a natural asset class where you have more control and showing we can build a school, help with various things, renewable energy. But the reality is that impact is not just on a small portfolio, as you say, because typically your average retirement fund invests less than 3%. If you have a look at the large manager watch surveys in those types of funds, every single investment that you make has an impact. That impact can be positive or negative. So let's take your listed companies. When you invest in some of the large brands like a Woolworths, you're actually helping employment. And there are some negative potential impacts there, around sourcing of food and all of that. So that's why you need to make sure that the practices are followed well. But the bottom line is it needs to be holistic. So from a trustee point of view, you need to start with your policy. You need to look at not just your risk return, you need to embed impact in there. Impact on listed assets, and then also how do you measure, monitor, how do you engage to minimize the negative impact and enhance the positive impact, and then also on things like private markets, where there's an explicit mandate to give you return and impact in a measurable way, and you need to blend all these in your fund.
So I think what's important is impact has to be intentional. There should be a measure in order to monitor whether that impact is ultimately achieved. And if that's not there, you should question whether it is indeed impact or whether it just says so on the can. But then there's another factor around around the intentionality, which is unintended consequences. So you could build a shopping center in a rural area, which would be great in terms of convenience. You would have some of the bigger South African corporates coming into that, but then what happens to the informal traders in the area and so on? So that's where ESG assessments ultimately come into the picture.
No, I think that's a fantastic example. That's why you need to look at it holistically, and you must remember these things, as you say, are interconnected. So a lot of funds they want to focus on the S or focus on the G. The reality is they're all interconnected. So you must find the right balance and manage it holistically. Also, you need to look at and track in progress over time. So, the way I like to look at it is there's 3 things you need to do as a trustee. Number 1, you need to integrate ESG into your investment processes. So how do you do that? You make sure that your managers really take ESG seriously at a portfolio level, question them in the investment committees, etc. How does it influence their stock picks, their hiring and firing of managers, for a multi-manager as an example? So that's the first thing. The second thing is you need to have policies around systemic issues, the big things, that investment managers won't look at themselves because they're just chasing returns, based on your benchmark. Those are things like climate change, inequality, transformation. And you need policies to drive that at a portfolio level from a trustee. And again, ask the right questions. And the third thing is impact. Measure impact. And you can do it these days. There was data has always been an issue in the industry, as you know. But there's been a lot of enhancements in technology over especially the last 3 years, on how to measure impact. And I've seen some fantastic examples of, you usually see the slides of your portfolios, risk and return. You can actually get risk, return, and impact as tools to use these days. Yeah.
And as the Actuarial Society, have you not done some work in that regard in terms of defining impact measures?
So not to that extent, but the work that we've done, I chair the Sustainability and Climate Change Committee on the Actuarial Society, and recently we've done a framework for retirement funds on climate change. So what we decided is we're going to focus on specific topics. So let's do climate change. There's a full toolkit that you can find online on the Actuarial Society website to help funds embed climate change in that. Within that, there are measures. What are the metrics that you want to look at for that specific theme? Look at a portfolio level, and that you can see where you're exposed to transition risk as well as physical risk. If the world does get to a 3, 4, 5 degree heating versus pre-industrial. We then also launched the life and health frameworks because it does affect your mortality and insurance and all of those things. And then in future, we're going to tackle other problems. And then we've also done a research paper, and it was an international collaboration with actuaries in Europe. We launched the Sustainability Reporting Index. And that is a benchmark of retirement funds globally on how they're doing, and generally not doing so well. So there's a bit of, but within that, there is an area dedicated to impact and promoting how do we measure and improve on that. So it's ultimately, we've done some work, but it's work in progress, and we're aiming to improve on that over the next while.
So I think it's a journey for trustees ultimately to follow, but that philosophical journey is one that ends well. That's the intent of it all. I actually had a trustee last week who said to me their biggest risk is ensuring that their members retire with sufficient capital. And I said, I agree with you. However, your biggest risk is ensuring they retire with sufficient capital into an environment within which they can enjoy that capital at the end of the day. So particularly in South Africa, we have to build South Africa for future generations and to ensure our own security. So in order to do that, are these two mutually exclusive?
No, you need to look at them together. So, this is not about tree hugging or all of that. It's about economics. So what you want to do is pension funds are long-term investors. To get a good long-term return, you need to make sure that the right principles are embedded in how you're managing investments. Climate change is real. The science says it. Doesn't matter what some of the politicians in the US will let you know. It has a real impact on GDP and returns. So you need to manage that environment. That's going to happen over the next few decades. And what you want to limit the risk and improve the return. And the same with things like nature, biodiversity, and all of that. So we look at it from the perspective of it's going to improve returns. Also, there are big themes there. Renewables, you can get great returns. You can also diversify away from certain things. And if you do these things, and there's other trends, and these create investment opportunities, to get good returns. But you must also be careful of where you can get like stranded assets. If with the transition, if at some point, coal mines might not have a future, but it's still going to be a few decades. But what you don't want is to be the last investor and lose all your capital. Also, there's a lot of mispricing in the market. ESG was a big trend, and you must, the hype can run away with you. So some companies that had high ESG credentials were overvalued, and companies that had low ESG credentials undervalued. Those are great companies to invest in, and through active management, improve their practices to get the return. But like you say, long term, it's pointless getting to retirement, and it's not worth living in. So for funds, you want to make sure you get a good return and real-world impact for a given level of risk. For all generations, not just your current pensioners. The youngest member, we heard yesterday that the youngest member on the GEPF is 18 years old. What is that member going to experience when they retire? And it's our responsibility to make sure that all the things are there and the capital is being invested in things to facilitate that, not to give you less returns, to give you better returns at the same time.
But what I liked about what you said there is its impact in the private market space can be quite clear. Listed market space, a little bit less clear, because if you invest in whichever listed company, does it create jobs or not? But one of the areas of impact is around shareholder activism as well, and helping them develop their better behaviors, which will result hopefully in better earnings for those companies. Do you agree with that?
Yes, and I think that's a huge one where you can have a big impact. Remember, South African industry, we're sitting in excess of 5 trillion in assets. Those assets are deployed into the market to do things, and you actually own shares in it. You need to vote those to do the right thing, to help, create the right environment for people at the companies, make sure that the management focuses on strategies, and that opens up markets, and then it's self-reinforcing. It helps the economy. As the economy grows, inequality reduces, there's new business. So these things all work together. Trustees have an important role to play, but some of them find it challenging because large funds can do it. They've got the budget to vote, and they've got proxy voting, etc. But a lot of funds are not able to, and that's where you outsource those functions to either your multi-manager, your asset consultant. The important thing is to make sure that those parties that are acting on your behalf, and that you give them a mandate and make sure that these are the things that I want, and that all those assets are being deployed. And make sure that all your service providers have good engagement policies, they're active shareholders, show evidence of it. So it's not just on a marketing slide, it's real. Those are the things that make a difference. But remember, a lot of your assets are also invested offshore. So it's not just about the South African story, it's about what is it doing offshore. And those circumstances are different. Inequality isn't as big an issue. You want to be focusing on other themes for your offshore assets. Okay,
so look, I think first of all, I could talk all day on this subject. So well done to you, and congrats for also being one of the catalysts for driving this discussion within the market. So it's good to see, and it's good to see across the conference over the past day, there's been a lot of talk about this, and there's a lot of thinking that has gone into it. So that's great. Are you guys here represented? Do you have a stand here?
We do. We've got a stand. So we've got Sanlam Investments and Sanlam Corporate Investments as well. Dani van Sail is talking, and Solid Sia, which is in my team. and they're talking about the age of confidence. So at Sanlam, we've done some research showing that the average South African can only retire at age 80, which is quite scary. It's just a different way of saying people haven't saved enough and don't get enough income in retirement. So Dani will be looking at a lot of the levers that one can pull and to improve the outcome. And Solly is going to be looking at sustainable investments and impact, exactly the things that we've been talking about now. So I hope everybody can join them for a session. And for those they're also doing a competition for a coffee machine. So if your coffee machine is out or you need a new one, you can go to the stand.
Right, we'll keep that in mind. John, thank you so much. If any of our viewers want to get hold of you, how can they do that?
Yeah, so my email address is john.anderson@sanlam.co.za. So please reach out to me. Alternatively, I'm on LinkedIn as well. You can reach out to me over there.
And I'll put your cell number in the comments below.
Yeah, I'm not very good at answering my cell, so we can try.
I won't do that, I promise. John, thanks so much. Appreciate it. Thanks for the time.
Leon, thank you so much.
Cheers. Thank you.
Cheers.